Hello, hello, hello. Let me know if you can hear me across the various chats. We got quite a few going right now. We have YouTube, X, and Twitch going for public chats. We have a couple private chats as well that are for those that cannot access those websites from their locations. So let me know if you can hear me out there. If the microphone sounds okay, we're going to get started in just about a minute and a half or so on my side. All right, let's get the music under control here and we're going to get started. Hello and welcome to Landy's Crypto Corner. Today is February 28th, 2024. And well, we're staring at charts live today, looking at Bitcoin's move to take out the monthly closing all-time high in the lower term timeframes. We are going to stick to Bitcoin for the majority of this stream. We may hop over and take a look at traditional markets, Dixie, gold, stuff like that. But we are going to focus on Bitcoin because there is a few things as we approach the all-time high that I want to talk about with you guys. So for those of you that have been around for a while, or even in the last month, just watching the live streams, Bitcoin has been taking every level, one level at a time, and getting pretty perfect retests as well within those levels. As it regains those levels, it fills out those levels. Had a nice little consolidation in the low $50,000 region, popped up to the mid $50,000 region, paused as we discussed, and then headed on up to our monthly zone up here. So this is the closing all-time high zone. We've got the first or the prior high to the all-time high on a close there that came in March of 2021. This was at 58.8. And then we have the closing all-time high in the monthly right here at 61,350 or so, where Bitcoin is currently trading right around. So there's not really much resistance. And I'd put out a post on X, formerly Twitter, and said, we're testing the monthly zone here at about 58.8. A bunch of bears are about to turn into bulls. And, that was essentially me saying, be on the lookout for a nice pop up from here. And of course, we did see this come up and nearly swing this first all-time high from April of 2021 there at around $65,000. Of course, the actual all-time high is up there at $69,000. If we do see a daily close above this monthly, there's only really one zone above, and it's probably quickly going to be taken. Now, we can evaluate today and see kind of where things go and see if where things are headed rather, and if it's more likely for things to consolidate in some of the lower term timeframes, or if it's just going to take it. And then, personal feelings on this right now are, the bears are getting absolutely wrecked. We also saw some bulls getting wrecked. There's a little bit of FOMO going on right now. We're going to actually jump over to the open interest chart and take a look at that, because the levels that open interest is at in relation to the price markup are telling us the story right now in terms of leveraged positions on derivative exchanges. And then spot is just continuously coming off the market through the ETFs and, just people spot buying as well across various platforms in preparation of an all-time high breach and then a subsequent run from there. So, whether or not we see the all-time high this week or next week and higher remains to be seen, but we'll try to gauge what that looks like. But more importantly, we're going to talk about, a little bit later after some of the TA, we're going to talk about greed. We're going to talk about paying yourself and keeping a level head when everything really starts to go crazy. It's the same conversations that we were having to the downside. You take things level by level, pull some good fibs, find confluence across various indicators. When things are in price discovery to the upside for Bitcoin, it can be pretty tough to gauge, but we're going to talk about some methodologies for identifying pullbacks when they might turn into higher term time frame pullbacks and what that means for price kind of going forward. But let's go ahead and check up on the daily here. We got a nice expansion, of course, on the daily above the mid $50,000 region. So the last that we spoke was Monday. I said, hey, look out for maybe a lower term time frame pause at 55K, but ultimately the main overhead resistance is going to be this zone. And, we are seeing, price got outside of the zone, but it is acting as resistance. So, this is not unexpected. How long how long price kind of hangs out here remains to be seen. It could just green candle its way right through. I mean, we are in that stage of the bull market, in my opinion. Now we are seeing expansion of the Bollinger Bands in this case as well. Upper second standard deviation is now at around $58,000. Upper first is at that mid $50,000 region. That was the really important region. And of course, now Bitcoin's trading right in that low, mid to low 60s in this case. And, we did have some indication that mid to low 60s was definitely in the cards on Monday as a possibility. Of course, the conditions for that were just simply trade above the mid $50,000 region towards that 58.8. And then as I mentioned, as Bitcoin tested it, right when it tested it, you could see it was ready just to move right through. And we can even look at that in some of the lower term timeframes. So, what a beautiful way Bitcoin has been playing these levels since 53, which was the big area that we were looking out for, that September of 2021 weekly swing high here. We saw, basically a 15-minute candle. We had already seen this area swung twice on the lower term timeframes that subsequently turned into daily swings into this zone. So this was the third test of this area. One little close open right on it and then moved right through it to the mid $50,000 region. Took that little bit of a pause on Monday and then immediately decided to head on up and then got that nice sideways and up consolidation. Nice higher low structure on the lower second standard deviation of the lower term timeframes here. And then where did it head to test a couple of times, 2 candles there on the 15-minute, right into that 58.8. Of course, after it regained that, we got a nice little retest and then a move right to the top side here at that 61,350. A little bit of a sell-off from there, not much, and then right on through to try and gun for the all-time high region on a swing basis. So, we also saw that late longs getting absolutely trashed to the downside. Of course, this move through this zone was a lot of bears flipping, and then when they flipped, it took out the rest of their crew, and then then of course profit taking takes out all those late longs. nice spike down below that monthly there, right into the mid to low $58,000 region. And so far, it's trying to climb its way back above that October of 2021 monthly close. Now, we do have a monthly close, so this is important. You know, we are not closing the candle today. We will be closing it tomorrow. So I will have a Staring at Charts pre-recorded video for you after this monthly close comes in. But this is the stage that we've been talking about. So we have not seen the the upper first standard deviation tap that, we've talked about in the past that Bitcoin has typically done. Let's go ahead and take a look at that. This is not what I want. I was messing around with the chart and accidentally brought up the wrong zone here. So let's go for the cycle expansion. And in all prior cycles, now this is something that we do need to keep in mind. Whenever you see expansion on the monthly, we're looking at the all-time highs and higher. So that was going to happen, and it's going to happen. So it was inevitable either way. In all prior cycles, though, we ran the bear market, the first bear market lower high, and then sold off back to the upper first before continuing on to new all-time highs. And in this case, in 2020, it was very slight. It ran and even closed in the wicks of the prior lower high from the first bear market closing lower high. Came back down, settled in right around the upper first. This is still a possibility, even if it's just a wick. Maybe not from here, maybe not this month, but at some point during this run, we're likely to see this even on a wick basis while we're getting expansion. It is not out of the ordinary, and this is aggressively moving up. Now it's above $40,000 there at the upper first. Of course, basis is pointing up. Now, these are going to update and be very aggressive. We've got the upper second at $50,000 here. It's 49.7 to 49.8, but we're likely to see that somewhere around where where our prior highs were in terms of the $53,000 wick there. That's this wick over here from this monthly back in September of 2021 over here. We're likely to see it there, maybe even a little bit higher in the mid 50s. This is now kicking off very aggressive expansion. If it closes like this tomorrow, it's going to be, it's looking like all-time highs are in the cards and much, much, much higher over time. Maybe a little bit of shorter-term time frame resistance in and around or above the all-time highs. So we're looking at this. This move still hasn't put in a high on the monthly, so it's not really worth fibbing that particular move right now. The biggest areas of interest to the upside over time above the $69,000 read are going to be somewhere around the 1272 to 1414 initially. And those are generalized targets. This is an extension off of the prior all-time high to our most recent macro low there at 15.5. You're going to get different targets when you pull this on a derivative exchange, because some of them went higher than spot here, and some of the lows went lower on the macro low. So that could drastically change the look of your fibs. Now, I would tell you stick to Coinbase Spot. It's the major player that's going to be custodying or is custodying all of the ETFs coins that are backing the shares there for the creation units. And I would use this as your base case chart, and then look at derivatives as either trading via at markup over spot or markdown under spot, and adjust accordingly. In this case, we're looking at 1272 at 100 to 1414 around 130, 1618 all the way up there at 173. So those are the big major fibs, the first big major fibs to be looking out for to the upside once the all-time high is broken. That does not mean that it can't swing the all-time high, come back down, mess around a little bit, which is 100% very characteristic when you see anything approach its prior all-time highs. Now, Bitcoin has a very good habit of pausing right at it, selling off from it a little bit, as we saw back here in the December or November to December candles, we saw the actual all-time high get approached. It did not get closed above in this case, and then in the open of the next monthly, came down, swung around a little bit, and then immediately took off through. So grab some liquidity under. So I wouldn't be surprised to see this kind of head to somewhere around the 70 to the 72 to 75 read. Now we have that based off of some fibs, and we can actually take the consolidation fibs to the current high, and we can even get a little bit, or we can take the last move. We'll take the last move because we have a defined low there at that 38.5 at the monthly to the $53,000 area, which are both major support resistance zones. So the 38.5 is a monthly, and then right here was the monthlies and the monthly swing high there. So if we go over here, you just remind ourselves, it's the weeklies there at 50,800 to 51.8, and then that monthly September 2021 swing high. So big areas. We can fib this out to get extensions. Yes, I'm using a log scale, and it's not going to matter much. It's not going to be much different on the daily if we were to go to higher term time frames. So if you were to use linear on the daily, you're not going to see the fibs be that much different versus log. It's more about going into those higher term time frames. So in this case, we can see that the 1618 is nearly being hit in this move, and that's right around 64,500. I'm sure there are exchanges that actually wicked up there. So if we start looking a little bit deeper, we can start getting some targets above there. So between the 1618 at around 64.5, we've got the 1786 coming in at 68, so just beneath the all-time high there at 69K. 1888 is another major extension here coming in at 70,000, and the two-spot extension is up there at 72,000. Above there is the 272, and that's coming in at 80, the 2414 at 83. So really you can see how this is just kind of a shorter term fib, but we could even take this particular move to the from the swing low there at the monthly to our current highs, and we can see that if we were to break out above this, we can kind of see where things are lining up first for the current move. So for the ongoing move, we saw that this 618 is going to be very important should Bitcoin start to retrace. This was for the wick to wick move here, resistance. You want to see that hold support. Worst case scenario is you want to see this thing staying above the 50% read here, coming in at 49,600. If it does drop below there, then we are looking at a retest right here at the 382 at around $46,000 to $47,000. Not my first thought when we're seeing expansion like this, especially because after today's close, we're likely to see the basis in and around this 618 fib number. And as long as Bitcoin is trading and closing candles above the upper first on the daily at around $54,000 to $55,000, I'm looking for this move to continue to the upside. We have very good BBWP expansion along with Bollinger Band expansion. So this move is just kind of getting rolling from the price volatility expansion, and then we're getting the re-expansion of the Bollinger Bands, where we have a Stoke turn to the upside here as well. Now this is pivoted pretty aggressively right now at 59,742. So I would keep an eye on it, but it's more about the expansion phase right now on the daily, mixed with our Bollinger Bands and BBWP. So this move, as far as I'm concerned, is very healthy and just lining up for more and more bullish resets of momentum here on the regular Stoke. Now, again, for those of you that might be new, this is a regular Stoke, not a Stoke RSI. So Stoke RSI measures the velocity of RSI. A regular Stoke measures close over close price momentum. In this case, it's closing back to the upside here after a short-term consolidation that sent things sideways and down for momentum because the closes were getting lower. Well, now it's got to catch up. So I do believe after close today, this number might even adjust down a bit because of the aggressive expansion to the upside. So it is something worth watching. If you do want to pick this indicator up, it's a free one grabbed from the store. It was recommended by somebody in the community anyway, because there are paid versions of Stoke indicators that have pivots like this that are projected for you. This one is by Trader Holly. It's called the BA Reverse Stoke. You can just go and search that. So that's B as in boy, A as in apple, and or Bravo Alpha if you like. Reverse Stoke, and you can find it in the indicators tab up there. It is free to grab. This looks really good. So if we fib the local move, we can also see from this shorter term time frame, well, daily consolidation, I should say, you can see that that Bitcoin, as long as it's above the 618 now at 58, 500 or so, then we're looking at this being very strong. That's even above the upper second, and then we're looking for more on this particular move. Now you can even find confluences for this consolidation to this move up if we are to go for extensions based off of this move. We're really, you have to live update these. It's more for pullbacks, but you can see that there is confluence coming in with some of the other extensions that we were looking at around 68 to 70, possibly even, 72 to 75 up here by the 1618. So, I would not rule out a swing of the all-time high and then come back down for liquidity. But just so you know, everything from here on out, not financial advice, every pullback, in my opinion, is opportunity, even if it is absolutely hellaciously violent in its movement to the downside. That's all opportunity, in my opinion. I've been asked quite a bit, like, do I think that there's an all-time high before the halving? It's looking like it. It doesn't have much more resistance to go. Looking very likely that we're going to see an all-time high before the halving. And the halving is only going to restrict supply further. We've got, the ETF players and whales and plebs, which is the everyday Bitcoiner, just hoovering up as much spot as they possibly can. And, then restrict supply, and we're likely to see this thing rocket ship. Now, I do want to give everyone a little bit of warning. This cycle is, and I've talked about prolonged cycles and prolonging cycles, or lengthening cycles for quite some time. Something that we've discussed since, the highs back here since the double top. For those of you that have been here that long, that I do think that this is a sideways and up compression on the macro time frames. When you look at something like the quarterly, this is we have a parabolic phase, a nice pullback to another parabolic phase. And could this be another parabolic phase, or could this turn into a, ever widening macro consolidation prior to, and you have parabolic phases on the monthlies and stuff like that. But this is, in my opinion, from the lows down here to the lows back here, this is a sideways and up compression. And you can see this even borne out with the Bollinger Bands that are just now populating for, we'll go to the index so it's a little bit easier to see for the quarterly here. But let's get the drawings off the chart here. Sorry. You can see that the Bollinger Bands, they do get a slight bit of compression on the pullbacks to the basis here on the quarterly. But we are starting to see that because we have decreasing acceleration, that what typically will happen with something that has a very limited supply is you get what's called like a macro compression. Even though it's compressing within a sideways and up range, it's still compressing and it's winding up for a major event. Now, you determine direction over time based on the volatility levels and the trend and all that kind of stuff. But, Bitcoin, in my opinion, will most likely go up forever. It's just to what degree as supply restricts. But that's a personal opinion. That's not technical analysis. But this sideways and up, compression is likely to lead to maybe even far more substantial prices this run than we thought, which would be the expansion of a really aggressive expansion of the quarterly, and then lead that into the 6 month. And when looking at the 6 month, we, as the asset has grown and matured, you're getting less and less return over time. But I do believe with bigger players in the game now, ETFs launching, you've got local municipalities mining, you've got a race to kind of get new technology to miners as well. There's a lot of ASIC stuff that you're going to start hearing about after the halving, with new generation ASICs and efficiency and like all this other stuff. You got power companies getting involved. This is going to, at some point, well, Bitcoin's going to eat the world, as Matthew Crowder likes to say. I like to say that it's going to be the base layer for the output, the energy output of society, and in through the electrical grid, of course, and then everything from there. But yeah, this is something that we'll get into after the halving. We'll start looking at the really long-term timeframes. I do want to take a look at this. This is why I'm going to be talking about this. When I say that this is a sideways and up macro compression on the very long-term timeframes, we're talking 6 months, takes years to play out. Well, we have not seen, because of the high volatility at the inception of Bitcoin being listed or openly traded, right? Well, we haven't seen an actual price volatility expansion. It's all been compression, sideways and up. In the next 6 month candle, Bitcoin has the chance. Now, this, of course, takes years. And when you have high volatility on longer term timeframes, that means that you can have entire bear and bull cycles within it, that while it's still sideways and up. I mean, that's what we've already seen with the macro low markups over time, right? But this could potentially begin to kick off in this year. We might start seeing it in the next 6 month close, maybe at the end of the year. That would be a cross up over the moving average for BBWP, which is price volatility expansion. And that, my friends, is something that we will have to monitor as time goes on, but massive implications. I also do want you to note that the 6 month chart has a cross up on a regular Stokes, so the next 6 month candle, which, we're just entering into the end of the 2 month candle. So we're going to talk about this in just a moment, but I wanted to kind of give you some perspective on that. And we're going to, of course, be talking about the quarterly, or continue to talk about the quarterly during the March timeframe. Of course, quarterly is pivoted at 26,440, and it is approaching its upper second standard deviation, getting ready to kick off full-blown expansion to the upside here. If it can close above, basically 61,500, 61.6. If it can close above there by the end of March, we're looking at this getting quarterly expansion. Doesn't mean that there's no pullbacks, but that we are looking at an expansive phase. Usually means more opportunity when things do come back down. More opportunity for those that would like to get long in the markets, but you need to use common sense. Now, the 2 month chart, this is, I apologize. The 2 month chart's going to be closing with the quarterly. 2 month chart's also poking up against its upper second, so we could potentially be looking at the 2 month and quarterly if they can get above the upper second. Now, this is at 63,500 on the 2 month time frame. We're looking at all-time highs and higher, plus expansion on these longer term time frames. So, things could get very aggressive to the upside. Of course, any closures outside of the upper third standard deviation, which Bitcoin has been known to do in every single one of its bull markets, and parabolic phases on the monthly, well, usually, we see quite a few candles. We got from November of 2020, we got the December that closed outside the upper second and third. We got the January, we got the February, and we even had the March. March is always, when you go over here to March is always a turning point, and or a major event area. It doesn't always have to be a turning point, but it's usually coincides with a major event. We can see that we saw in 16 to 17, what Bitcoin did is it got right up against the upper third standard deviation before coming. This was where it swung the bear market lower high, the first closing lower high of the bear market. This is where it swung it and then came back down. And honestly, if I were to make comparisons with cycles, I do think that we're looking at something that looks very much like our 2016 cycle. It doesn't mean it's going to play out exactly that way, but you can draw the correlations between them. Upper third standard deviation on the monthly comes back down to the upper first, which of course didn't happen until 2 months later after that close, which allowed the upper first to come right up to support areas, right? So it was still a beautiful markup, and from there we saw that it just rode the upper first and upper second all the way up, got a nice closure outside the upper third, got a nice closure above the upper second, continued closing above there, wicking down, closing above there, and then it was like all done at the end there. Say goodbye to the downside. We are looking at, basically just the beginning, right? Just now seeing follow through with the after the December candle closing above the upper second, kicking off that aggressive expansion of the Bollinger Bands. We're seeing this follow through with BBWP expansion, so price volatility expansion, of course, closing outside of the upper second and even the upper third is going to drastically kick this off. This is going to hit the all-time high soon, whether it happens, here this week, while we have, the close of the monthly and coming into the March candle, or whether it happens, sometime early March. It is definitely looking that all-time high is very much in the cards. So new all-time highs and then run of the all-time high. And you're likely to see things get absolutely nuts. But if you are in trades, you need to be very careful, because the more expansion of volatility that we get means that if you're in the middle of a move and you're longing, for instance, or shorting, and it hit a major area and people are taking profits, let me hedge a little bit, whatever it might be, whatever your ideas are, just know that because volatility is so high on macro time frames, we're not talking just the daily where volatility is like burning up every indicator. Well, that's because volatility expansion is kicking off on more macro time frames. And that means that price volatility can have massive swings on those lower term time frames. So you have to be careful, and you have to make sure that you are being logical, that you are still paying yourself, and that you are not getting aggressive with high leverage. I've seen more people get absolutely liquidated and destroyed on high leverage after an all-time high break because of the, it might not look like it, but the volatility in the candles on the daily can be nasty, right? So, high leverage will take people right out of position. So if you're trying to catch something and you're late to the move, give it a little bit of time to develop. Come back to it when it's in a consolidation. Evaluate the consolidations, whatever time frame it might be consolidating on. If it's right in the middle of taking off, you better watch out, because we can have things like what we saw today, which is a beautiful move up. Everybody goes long, and then absolutely slam it back down to take them out. So just be careful. You got to use good judgment when it comes to these things, especially if you're trading leverage. Of course, none of this is financial advice. You do what you're going to do your own research, all that, blah, 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 blah. But it can be very, very tempting to just hit green button go on very high leverage and be like, oh, I'm going to be a millionaire now. And then you come back and you have no account anymore. This happens a lot. I've seen more people get wrecked in bull markets than bear markets in aggregate, because there's more newer people coming into a bull market, and it's just, sick freaks that hang out for the bear market. So thanks for hanging out at the bear market with me. I appreciate that. We're all the sick freaks that hoovered up all the coins on the bottom. And I want to congratulate you for making it all the way through that bear cycle. Now, we've been in a bull cycle for about a year, but still, I mean, when you're starting to approach all-time highs is really where the excitement kicks in, because we've been able to play, levels, and now we have to adjust to price discovery. So it's a very different type of a skill set, but you don't throw out, your basic skills that you've learned, whether it's from me or that you've honed over the time period in which you have been trading in these markets. So don't let it go by the wayside. For those of you that have been through bull and bear markets before, every single time it's still super, super nerve-wracking and exciting. It never goes away. So if you are feeling like an absolute newbie when things start to break out, just understand that even the most hardened traders feel that way too, myself included. I mean, if you can't hear the excitement in my voice right now, I'm absolutely ecstatic. I am jumping up and down. No, look, you gotta remain level-headed. Bobby often says, like, you must be dead inside, like, because everybody's freaking out over, especially when we were on the lows. You become a little numb to it the longer you've been doing it. But yes, I feel it too. And as long as you are a human, you're gonna feel it no matter how long you've been in the markets. So don't forget to use good judgment, and don't forget to pay yourself. If you're in things that are going absolutely bonkers, you need to pay yourself, because often people will have something that they are holding, whether it's Bitcoin or something else, altcoins, NFTs, whatever they might be. They ride the wave all the way up and they're like, I want more. And then they ride the wave all the way back down. They sell for break even or at a loss. And it's really, really sad to see, especially when in many cases it's people that should know better. So make sure that you are using good judgment. You're not abandoning the skills that got you here. And if you missed out, understand that there is plenty of tradable moves. The market doesn't go anywhere. Remember, you trade the price movement. That's it. If you wanted to be an investor, you should have been investing the entire time. If you want to trade, you're trading price volatility. You're trading the movement in price. So it doesn't matter what that price is. But just like to the downside, when things were headed down in the bear market, things were more likely going to sell off when they pumped, right? So you're going to get aggressive sell-offs and holding that downtrend. Well, it's the same for this uptrend. I mean, it's only getting more parabolic as we speak here, which means that there's probably major corrections coming up. As I said on Monday, though, we don't know where they're going to come from just yet. We need to see all of the basic principles apply. Need to see a daily high. We need to see a low then get broken, or a higher low get broken. Look for consolidation to expansion. And we already saw swing high to swing low on the weekly here, so we have beautiful structure. I'd be looking for the daily to develop daily highs into a daily higher low at this point. And that's, in that case, it's probably going to look like a weekly swing high to swing low. Maybe we get a weekly high to a weekly higher low, right? Whatever it might be, you just got to understand that you can still look for all those structures. So there's plenty of opportunity. And bull markets, just like just like the bear market was really fun to trade for some of us, right? For those of us that were here during the bear market, I had a ton of fun trading down. It was the same, as the way up, just on the way down. It's just reversing your trades, right? And instead of getting googly eyed about, $8 to $10 to $12,000, we maintained our targets. Only if those targets got taken out do we start looking at those targets. We're going to start developing now. The advantage to a downside move is you have historical support to work off of. And what I've been talking to you guys about in terms of compression to expansion, this entire, bull cycle, for those of you that were in this bull cycle with me, entire bear cycle to now bull cycle. One of the big things that I had talked about this entire time is some of it was basics for many of you that were new to trading. And then we got into more refined stuff on the way down. When we picked the bottom and things started to reverse, I started to teach you a little bit more about bands and volatility and really leaning into it. Because when I tried to lean into it back here at the tops, it wasn't making sense because a lot of people didn't have the prerequisite understanding of price movement. Now you do. One of the big things that is going to be really key is keeping an eye on volatility as it relates to price action, and of course support resistance will play a role locally, but it's always going to be a little bit more locally after we go into a price discovery phase, which is coming up very quickly. So we're looking at the price discovery phase probably going to be much quicker than many expect, maybe even quicker than I would expect. I'm thinking, we could even see something. I'm talking about like maybe this week you could see it, maybe by the end of the week or the first part of next month, right? Maybe we go into a cool down and it takes all month coming into April. Maybe it doesn't hit the all-time high before the halving. It certainly looks like it wants to, though. I could end the stream today and it could go take out the all-time high. It's not far, especially with this level of volatility in the markets. So point being that when it goes into price discovery, volatility is going to be the key. And you work from higher term time frame to lower term time frame volatility. When you start getting above the Bollinger Bands, in this case, like on the weekly, on the monthly, you're gauging the levels of volatility and where they line up with support and resistance, even during the blue sky breakout periods, price discovery phase, whatever you want to call it. Then we're looking for this to actually, start lining up with previous shorter term timeframes of resistance. And then, of course, that should inform downside support areas based on volatility. So it's going to get, it's much easier in a way. Just like red button was your friend on the downside moves, green button's been your friend on the upside moves this entire time. That's going to last for a while as well, especially in price discovery. Just make sure, just on the downside moves, don't get taken out of position before you have a chance to actually pay yourself. So, all right. I think that's going to do it for what I wanted to say about some of this. So, the 4 hours burning up. We're painting a doji, possibly an evening star reversal here on the 4 hour. I'd be very, very cautious of this as long as Bitcoin is trading above that upper first standard deviation at 58.4 to, I would say, around $59,000. Because this is going to update here in about 18 minutes. Well, what I'd be looking for is, sideways and up, probably fill out that wick area, maybe even go for some more there by the 64,600 area, slightly above where the high is currently coming in at 63,979. Now, there was plenty of exchanges that hit 64. Some even spiked 65,000. So it spiked the first all-time high from 2021. And, I want to see spot do this. Not necessarily derivative exchanges. They're going to get crazy. As long as it's trading and closing candles above, it's sideways and up. And right now, that's around 58,400. So I would take it a range there, 58,400 to around $59,000. We'll come back to this when it updates on the 4 hour. But just below there, I'd be keeping an eye on the close open areas here, right around 57.3 to 57.5. If that area was to start getting lost, we start looking down to 56 to 56.2. If that does not hold up, we start eyeing that basis band, which is coming in around 55. So $55,000 to $56,000 is generally where I'd be looking if we did see this wick low of the current 4 hour candle rather taken out. And that is coming in at 58,145. So if that does get taken out, I'm looking for basically mid $50,000 region again. Of course, if that falls apart, we do have the lower first standard deviation on the 4 hour now at 52,187. And that's riding the top side of this consolidation that was spiking up into the $53,000 range. That 2021 September weekly wick high or swing high. That was prior to putting in the all-time high. That was the first major high prior to putting in the $69,000 all-time high. So that would be the next big target to look at is this area down here. Of course, if that was lost, we're looking for very aggressive downside into the lows there at the weekly zone, 50,800 to 51.8 or so. Below there, that's where we're looking back to, the monthly areas at around $47,000. That would be from here. That would be a pullback right into the upper first standard deviation on the monthly. Of course, we are going to look at that when it updates. After it updates, I will review it tomorrow after close, and then we'll talk about it on Friday for our live stream as well. But 4 hour, very strong. Could this be the end of this move on the 4 hour? Yeah, in general, I would be considering this as more of a consolidation range. My bet is if we go through some of the time frames, we're probably going to see, like let's look at the 6 hour. Yeah, so let the range load here, or the indicators load. The upper first is at 57.6. 57.7 or so, we'll call that. And when we compare that, which we can do, if I pull up the 90 band indicators, and we're going to be making some changes. I just haven't pushed them out yet. We are going to go to medium time frame levels, and I think I don't remember where that is. LB MTF medium time frame levels. I don't remember where I put the indicator. We're still working on it, but yeah, give me just a second to look, because I know I have it on here so we can check multiple time frames at the same time. And I'll be darned, I'm not seeing it. There it is. Cool. So we can see multiple time frames with this. Let's go ahead and put this on the 6 hour. I have to update all of these, and this will be updated soon. You know what? This isn't even the most updated one. So this is running the 4 hour here. Interesting. Or no, this is not running the 4 hour. Yeah, it is. So if we were to go to the hourly here, let's look at where the hourly bands are in relation. So hourly basis is right below. Yeah, we're getting nice hourly expansion. I'm going to have to come back to this so we can just manually compare. So we have the upper first here on the 6 hour at 57.7 or so. We've got the 4 hour 57.7 is going to be, yeah, it's basically the highs of the prior consolidation is the upper first on the 6 hour. So where is the basis here? So the basis is down there at 54, so it is above the breakout. You want to see that? So as long as this is hanging out in the strong half here, this means that from the 4-hour time frame, we could see it come down and hit the 6-hour upper first wick on a wick basis, and it would be just fine, or retest that consolidation. If it closes anywhere below the upper first, then we're looking for, the basis to continue to move up, or we're probably looking at that mid $50,000 consolidation. The upper second, if it continues to close above there at $61,000, then we're looking for the highs to be in play again, probably up to around $65,000, right there at the all-time high zone. We can actually throw the why I'm getting messed up. Some of that's because of me looking at index, and we like to chart our spot price here. All right, so we're looking at 6-hour upper second right around that monthly close, and upper third is approaching the first the swing high prior to the all-time high there at $65,000. So definitely a viable target. Let's see how we're lining up with support and resistance. Yeah, we're bracketing the monthly zone with the more aggressive standard deviations here, upper first, upper second. So obviously if the upper first on the 4 hours dropped, we're looking at support and resistance first. Yeah, I would say anywhere between 55 and 57. That's going to be kind of the sweet spot, I believe, if you do see the monthly zone at 58.8 dropped and the upper and price start trading below the 4-hour upper first. If we look at the 12-hour though, we're still in an expansive phase. So I do want to point this out. 12-hour is still very aggressively expansive on price volatility and the Bollinger Bands. So we had that beautiful compression right below resistance in the weekly zone here. I got to fix the background color there. I painted outside the lines a little bit, but we saw the nice consolidation, got the beautiful compression. I told you this 12-hour compression was the thing that I was watching. We could front run it on the 4 and 6 hour. The closes above that weekly there at 53 were what we're going to do it. And now we got that nice expansion, and this is going to look to continue. 12-hour is in the monthly zone as well for the upper second. Upper first is coming in at $56,000. So again, we're getting the same kind of confluent areas. If Bitcoin does start to mean revert on some of the medium-term time frames, lose its current monthly zone that it's in, then we're looking at around the mid $50,000 to $57,000 region. You could narrow it down to 55 to 56. If it loses it, I'd be looking for it to come back and retest around 53 again. Just level by level. Right now, though, this is still getting expansion on the 12-hour, so this looks beautiful. 12-hour Stoke is still turned to the upside, 54,795. So basically $55,000 is the current momentum pivot coming into close today. Again, that daily pivot is going to be at 59,742 or 59,750 if you like. I would keep an eye on this because I do think this number is going to drop because we have higher. This is still kind of reading back here where it's just got its turn. I mean, it is aggressive, so it could kind of, this number could stay high for the momentum pivot. But because of the expansion, I would expect this number to drop a little bit. So I do think it's going to be kind of under price and or just chasing the opens of the candles until it catches up. And in this case, I would put it somewhere around the 57 read for the pivot, to be quite honest. So again, that's the close open for today as well, where that consolidation was coming in on the high side. When we extrapolate this out into the new 2-day that just opened, well, you can see that we've maintained expansion to the upside. And this upper second standard deviations right there at the monthly. Close open there at 58.8. We see the upper third is right there at 65K. So we've already, after closing the last 2-day with the perfect close open off of the weekly zone of support, well, we saw it just really rip right through after the close on Monday. Now, well, it was the open on Monday, and then immediately start expanding up. Now BBWP is it went flat. We did see a slight negative slope, but it got back above it. We're looking for this to get a close open coming into Friday's candle, and then we're looking for this to continue up to some of the higher reads on BBWP with this continued expansion of the Bollinger Bands. We see the basis is now above that monthly there at $47,000. Beautiful. When looking at the 3-day, which was a beautiful, this was one of my favorite. I told you guys about this compression when we saw it. Like when we started seeing it grab onto the basis and really get this compression, man, that was like the next move is going to be a big one. So 3-day, really kind of in the driver's seat in terms of expansion. It's at a 92 over 83. Upper second is at 57,189. Upper third has been tagged, and actually price went through it a bit there. As I said, trading outside of the upper third standard deviation on the monthly, and then starting to push the upper seconds on the 2-month and quarterly. You're going to see this trade a lot more aggressively outside of its upper and lower bands on these timeframes below those macro timeframes. So don't be surprised if price takes a break for like a couple days and absolutely slams to the downside and then just absolutely rockets back to the upside. Nothing like that should surprise you because of the increasing volatility on those macro timeframes. In this case, it's not tapped out yet. We've got plenty of room to go on BBWP. I would say if it starts to drop the upper second standard deviation on a 3-day close, which is going to be closing with the next 2-day candle coming into Friday's candle. So we've got, Thursday, we've got today and then Thursday. So the open of Friday's candle will open the 2-day and 3-day candles. So something to be watching for is if we do see it closing back below the upper second in this particular time frame, meaning between now and Friday open, we're looking at, I would be looking at BBWP crossing back down below its moving average. We can also see that 63,150, which is right above us. So yeah, this is aggressively updating the pivots. These pivots might not drop. This is live updating those pivots. We'll see what the close open is for it. But as long as it's hanging out in this monthly zone, probably going to run that all-time high sooner than later. But it remains to be seen. If it does start closing below the upper second at around 57, then we're probably looking at a little bit of mean reversion. The 4-day is going to be closing with tomorrow's candle. So upper second is here at 55,000. It's actually around 55,700. See the upper third. Bitcoin, if it threatens to close outside of that, this is nice 4-day expansion. So nice compression. It's not as deep a compression as something like the 3-day because price didn't go absolutely sideways. It played in the larger range, hitting that lower first perfectly. Then grabbing onto the basis, closing above the upper second. And then it's just been expansion since, even refueling at that upper first. So that is now coming in at 50,600 to 800. This is going to update a little bit more aggressively coming into Friday's open. We've got the 5-day, which is, guess what? Going to be opening with Friday's candle. So we're going to get the close open on this as well. Upper second standard deviation at 55,600. Upper first is starting to come into that previous area of support. This is what you want to see. It's currently at 50,200, likely going to be right in and around that 50,800 to 51.8 level. The basis on the 5-day is now approaching those monthly supports, the monthly support zone at 45.5 to 47K. I would expect the basis to be in there as well. If Bitcoin does drop the upper second, upper first is the likely target, wherever that updates to. That would be equivalent to a run back to retest the breakout here, the current breakout structure. But look at this. This is what I want you to see. Macro timeframes are expanding. So we've got beautiful price expansion, beautiful compression to Bollinger Band expansion. We are looking at an all-time high run and higher. And then guess what? We've got the weekly following through. And of course, we're going to follow up with this on Friday, taking a look at how the closes went for the monthly and the other time frames, which would be every time frame below the weekly. So our 2-day, 3-day, 4-day, 5-day, at least the ones that we're tracking. I imagine you can find some esoteric time frames, like the 6-day are probably going to be somewhere around that time frame as well, if I'm recalling correctly, because of the way the 3-day is. It's either going to be 3 days to go on close, or it's going to be coming in a Friday, or it's going to be closing with the 3-day. I don't really pay too much attention to the 6-day, but some do. In this case, weekly, as long as it's above $56,000 at the upper second, we're looking at the upper third, which was at the monthly here coming into this weekly. It was right around the monthly at 60 to 61,350. Now it is above because Bitcoin is trading above the upper second during the week. So this is likely going to update the upper third right there to somewhere around that monthly swing high zone, between the first all-time high in 21 at 65 to 69 up there. Beautiful, beautiful stuff. So trend fibs, I have a request for what trend fib should I use? Well, it depends on what you want to use. I mean, you can, when you're looking at trend, I mean, this is your daily uptrend. So it depends on how you want to count. If you're counting, it depends on what methodology you're using of analysis, but you can do anything you want. Because it is a trend. If you wanted to pull this to this guy here, you'll see we're at a 3618. It's trading below, but it hit the 4 spot in 4236. If you want to take it from this low of this trend, and there's waves in here, so if you're doing Elliott wave analysis, you would be doing this in accordance to what Elliott wave analysis criteria is. If you take the full run from the low at 38.5 to the most recent consolidation, you're going to get confluent fibs. It poked on the 50% fib, went up to around the 8 at 8, nearly 100% there, which is coming in at just under the first all. It's actually, this is lining up perfectly with that first wick at around $65,000, coming in at 64,902. What was that first wick? It was 64,899. So you can see that the 100% extension on this for this move here, which is the equivalent move to the upside, just in a more, instead of it taking this long, it's just using about 5 days of candles to get up there, to basically the March of 2021 all-time high prior to the big sell-off and reaccumulation. So you can do it that way. You can also say like, okay, well, I'm going to take it from this guy here, this higher low on a close, or you could take the higher low wick. And then you look here, if you take this particular move up, so we've got the consolidation, then we've got the higher low close, take that wick to this wick high, to the higher wick close, higher low wick on a close. You'll see that we hit the 1272 of the extension. We're at 100% of this move up. And, if you're going to go further, we're looking at 1272 is already been tested there at $64,000 here on this current wick. 1414 is at 65.5, almost 65,600. So again, that's the first all-time high in 2021. 618 is at $67,000. 786 is at the all-time high and a little bit above it. So you got a zone between the 1618 and 1786 to about 69,500. We had some other regular fibs, not trend fibs, that were coming in this area as well. But we've got the 1888 at 70,000 to around 72,000 at the 2 spot. 272 to 2414 lining up with our mid $70,000 region. So To be quite honest, above 69K, I'd be looking probably like 72 to 75. And then see what happens, right? Could it wick higher? Could it go all the way to 80 immediately? Maybe. Yeah, it's definitely deep 70s. Maybe things get really crazy. But I would expect some sort of a pullback either at around the all-time high. Maybe it's getting front run right now, or slightly above it for just to come out. Whenever you see a breakout, typically you're going to see a liquidity grab in the opposite direction, even if it's just on lower term time frame wicks, like the 15-minute, like what we saw earlier, where they absolutely slammed price back down. When I say they, it was the nebulous Steve. It's only one guy. He was looking at the market and he was like, hey, let's wreck all those guys that just got in. I'm going to take their money. Damn you, Steve. The one single market maker that runs every market. Forex markets, Steve, it's him. Bitcoin, every market, it's Steve. I literally had somebody leave when I said that. Obviously, there's no market maker named Steve. I'm making fun of a particular group of people. If you're a fan of them, be a fan. But as somebody who understands what market makers do to a massive extent, yes, some of you actually are market makers. Yes, Series 24. You just got to be careful because prices, the order book's going to go where the liquidity is. And, if the asks start hitting the bid, sellers are hitting the bid hard. And there's a lot of high leverage people playing the breakout, probably going to get the smackdown, right? So, and the same on the other side of this. There's not much protection here for shorts. So a lot of it's going to be profit taking in areas and then shorts pile on with it. Maybe slam price down, hit those late longs. And then there's not, we're at the last levels of resistance. Most bears are flipping bull now, whatever bears were left. There might be a few capos out there, a few profit blues out there or something, but if they haven't flipped bull by now, then they're LARPing. I mean, they're already LARPing because they suck at TA. And yes, you can take that one to the bank. You can clip it, record it. I don't give a shit. They suck. They're LARPing as good TA people, and they obviously have never spent any time in the industry. Yeah, they're at-home traders likely. They got lucky with a few runs. They read a few books, and then they posted some charts online with literal LARP lines, like literal actual LARP lines. They are actually LARPing. Like, it's not like an if then, it's an actual LARP. Like, this is going to happen. Like, give me a fucking break. Anyway, look, if you're going to do LARP lines, you do it more like what Credible Crypto does, because he has invalidation and he's projecting the actual wave count that he would like to see for this structure to maintain its structure in accordance to Elliott wave theory. So, he's projecting out that if this is going to play out in this wave pattern, this is what I'd look for. Here's my invalidation where I am wrong. And all of these other guys move their invalidations all over the place to serve whatever freaking, narrative it is, or to try to cover the fact that they're shit at what they do. And the reason why I often, for those of you that are a little bit newer, I usually hold my tongue. But holy crap. Some of those people have gotten their entire, I've watched their communities after moves like this, where they've said like, well, I'm expecting $50,000 and then a distribution. And then that's when things really get kicking off. But I've watched them, these people that they've said this to come back like, hey, you said this was going to happen, because they don't know. They're just following this guy because they found them on X or Twitter or Telegram, and they don't know what they're doing. They just, hey, this guy's giving out really good information. His charts are fancy and he draws lines on them. So, and he's got a big following, a botted following, but a big botted following. And most of the people just follow him because they want to shit on him. They don't know that. So they're all asking questions. Hey, like, what happens now? Like, what, now that that's been blown past, do things change? Do I still wait for 12K? like they don't, legitimately, they don't know. And it's high time that that those who are really good at what they do get a lot more recognition, because they're helping people understand the way markets work, especially with giving invalidations and not moving them. Because if you move your invalidation, then why did you have an invalidation in the first place? You're just adjusting your theory to fit what you want to see at that point. And a lot of these guys do that. And then you have guys like Credible, who are actually credible, good traders and technical analysts, who give you the invalidation that they are looking for their particular style of analysis. Same for me. It's all conditional, right? We trade conditionally. And I trade conditionally. I hope you are too, if you're listening to me. If price meets the condition, we are looking either up or down, whatever that condition is, to the upside or downside. And, you know, we've been highly, highly accurate here because of that. And this is nothing crazy. It's not hard to do, but it is harder to do when you have a whole community of, it's harder to do for people who are newer and even people who are experienced, when you have a whole community of folks who have no clue what they're doing, but act like they know what they're doing online. So seek out those good people who are going to give you their raw thoughts on the things, tell you if they're wrong, tell you what their invalidations are for their theories. Your Credibles, your MDXs, your Rickas, your many others. There's many others. Crown, Eric Crown. Those are obviously the ones that I tell you guys about all the time. If you aren't paying attention to them, you should. But you don't weigh my analysis or their analysis over your own analysis if you have a working plan. If you have been reading price correctly and you've been nailing your trades, you have a system and a plan. Just because I see something that you might hold an opposite view to, you just have to look at that and say, well, that's, you know, he's seeing something. Am I seeing the same thing? And if you are, you know, you determine where your invalidation is for your idea and my idea. Don't take it as sage advice. I have very different trading plans that I implement to take advantage of these moves. So you should manage your risk wisely, lower the damn leverage. You can make a lot of money on 3x. You don't need 100x. You don't need, you don't even need 10x, to be quite honest. So you're taking advantage, and remember that you're taking advantage of the movement in price, not the price itself. So everybody, it's like looking at the right side of the chart where price is, really messes with people's heads when they're trading, because they're thinking about their overall position and portfolio size, not their trade that they're trying to complete to increase their overall portfolio and position in the market, right? So just understand that you're trading to take advantage of the volatility in price, which is one of the reasons why we focus on volatility. And do not forget, trend is your friend until the end of the trend. When the trend is unclear, everyone's in fear. Support and resistance is the next biggest thing. Volatility is equal with both of those, being trend, support and resistance, and volatility. And those all create the fourth pillar for trading and technical analysis, and that is momentum. So the first three create momentum. Trend, support and resistance, and volatility create momentum. And that means that you should not take momentum over trend, support and resistance levels, and the volatility. It is just there to help you confirm And you can even start predicting when it's going to turn and when it's not based on trend, support and resistance, and volatility. So that is basically where we're at with that. That's the bulk of what I wanted to say today. Downside, as I said, we start losing this big wick low, which, by the way, you can see here the volume on that, massive. Now, of course, it was high volume at the high here, right into that 1272 fib that we just pulled to the low here, which came into a 1786. Around this 888 to 100% of that extension that we pulled from the prior move up to the prior consolidation. This is the extension of that. And in this case, we don't really need that. I hope that you understand what I did with that. You can do it a few different ways, but what you're looking for is confluence with major fib levels. So this is, consolidation low to high to the consolidation low, right? So you're looking at this move. We've hit 100% and then some, 127% up there, 127.2% on that wick into $64,000. So that's not the be all end all move. There's lower term time frame moves that you could pull in here from the 4 hour, for instance. So anyway, what I wanted to point out was, from a volume standpoint, the biggest high volume high candle on the way up right now was at the top side of this compression to re-expansion on the 15-minute. So if you did want to start utilizing volume areas, so we've got wick to the high here is kind of what's been holding price up. From there, you've got a big old candle into the low there. You could take this whole candle if you like, if you're doing volume, because we're on the 15-minute, doesn't really matter. You take the close open to the wick high because it's measuring the move up. You could take the shadow on the low. You can see how the close open from these two candles that kicked off the expansion here. It did bracket the wick lows here. Once it got above, you could see that it held the top side wick high of this higher volume candle on the move up, and then it hit really high volume up here. So realistically, if it drops this low here at 58, 125, we're probably looking at, that $57,000 area, upper 57, like 57,500 to 57,700. If it drops that area, then we're looking mid 50s. I got a win Lambo in the chat. It depends on what your priorities are, sir. Is the Lambo the most important thing? Or, you want to talk if you want me to talk like real investment stuff, like you take an asset to an asset that appreciates in value. Now, of course, every asset on the planet depreciates in value versus Bitcoin, just so you know. So what asset would you rather be in, like a house or land? Guess what? Every single asset depreciates against Bitcoin. So I would rather take and instead of when Lamboing, win more Bitcoining, give me major retraces. But that's not in the cards right now. We could get daily retraces, but that's not a major retrace. Yeah. Here's the thing. All right. So I actually do want to talk about this. I don't usually talk to you guys about my personal philosophy outside of trading with some of this stuff. But I'm going to give you guys, for those of you that know, somebody who's here that's new doesn't give a shit about my opinion. So for those of you that are here that have been here for a while, and if you're new and you'd like to hear my opinion, I'm going to give it to you whether you want to hear it or not. But I want you guys to understand something about Bitcoin that maybe is not 100% clear to some of you. Bitcoin is the ultimate asset. If you look at the Bitcoin price chart versus anything else outside of the US dollar, if you're looking at assets, all of those assets, including over the long term, we're not just talking, the current US dollar chart. I mean, the current US dollar chart on the 6 month is just straight freaking up, right? So what does this mean? If you look at USD BTC, and we are to go to all, and we compare, I think there is an actual chart that they put up here for USD BTC as a pairing. But I mean, we'll just add the Dixie chart, right? Oh, hold on. We're on the 6 month, and I've done Dixie dirty here. Hold on. Oh, poor Dixie. You're all the way down there. Looking sad. Do we want you as a line chart? Well, anyway, that's not a good example. I want to go to, because it's percentages. I added it as percentages. I probably shouldn't have added it as a percentage. I should have added it as a percentage. But either way, Bitcoin's been going up forever since its inception against the dollar. And I believe you should be able to do like gold BTC pairs. Why am I blanking out on how to do that? I just did it not that long ago. Gold versus BTC. Yeah, they should be able to denominate it out, and the in different currencies. Why am I not seeing it? Yeah, I'm failing in that regard. So my apologies, but it's just because I try to think of it on the spot, and of course, whenever you try to think of something on the spot that you haven't prepared, it goes horribly wrong. But either way, if you pull historical data charts for any asset, including housing, Bitcoin versus those assets, they are trending down forever. And Bitcoin is trending up likely forever. Now, that doesn't mean that there's not going to be high volatility. But realistically, what does that mean? That means you should never sell your Bitcoin. And then what do you mean never sell my Bitcoin? If I never sell my Bitcoin, how am I going to buy my Lambo and my yacht? Well, you have an asset. And if you want to borrow dirty fiat dollars against that asset, you can. Guess what has allowed Bitcoin as an asset to become, well, accepted everywhere now? That's the ETFs. Now that the ETFs are in play, that allows, if you have custodied Bitcoin, you can multi-sig and you can put your asset up as collateral. You can borrow against that asset. Now, of course, what did you see last market cycle? You saw a bunch of these places go under, right? A bunch of these lenders that would allow you to basically take USDT loans against Bitcoin, Ethereum, or whatever shitcoin you had. Well, all those companies went under, and they, of course, blew up those accounts and rehypothecated the underlying assets to other people and stuff like that. Well, guess what? Now you can list the asset and borrow against the asset as long as you hold it through regular conventional lending. And this is made possible by the virtue of having Bitcoin ETFs, because you have major players in the market that are, because there's an ETF wrapper. you can borrow against Bitcoin now, because guess what they're going to do? What is everybody doing with their ETFs right now? Well, you can borrow against your portfolio holdings. And of course, if we take just a moment to look at the Bitcoin ETFs, what do we got here? Oh, they're all up massively. Obviously, they're the drivers behind a lot of this right now. And you can see that they're making new highs. Nice little reaccumulation, nice uptrend on the daily here for IBIT. Spikes its daily upper third standard deviation, painting a real evil looking evening star there. It doesn't mean it's going to remain that way, but I wouldn't be surprised to see things come down to 30.96 or even lower to $30 again. But either way, I mean, that's the equivalent of Bitcoin going back for a retest at 53, maybe dipping a little bit below into the 50s. But what you got to understand is, if I'm a municipality and I hold Bitcoin itself, that's an asset that I could always sell, or I can leverage, right? I can leverage and get loans against. Well, you can now pretty easily, there's a lot of players in the banking system that will give you fiat dollars in return for Bitcoin. So they'll lend against your asset. If you're a bigger player, they'll do it anyway. They'll just aggregate what your holdings are, just like they do for your house. Now, the thing is you do have to secure that underlying asset, and there are options for doing so. So if you have a lot of Bitcoin and you want to lend against it, you can, which is something that I'm going to tell you. This is not financial advice. I do suggest, if you hold a lot of Bitcoin, that you do not sell it over the long haul, and you want to take a 10-year loan against it, you can. Now, I wouldn't do that right now. Rates are stupid high, and I wouldn't secure Bitcoin against that because, as it stands right now, there's still some shaky ground. If anything, you take some of that dirty fiat money and you buy shares in the ETF, and you can borrow against that easily through your brokerage account. That's what every traditional market degen is doing right now, just so you understand. They are going, I have custodied Bitcoin, or I don't want custody Bitcoin because I don't want to have to give up the asset through multi-sig if I want to take a loan against it to go buy Lambo. Instead, let me log into my brokerage account and go buy, $500,000 in IBIT shares, and I'll immediately have 20% of that available to loan out, and then 50% after 90 days. So I can buy, sell. I can also lend out as well. So I can either take a loan or I can lend out against that asset. You can also go through other brokerage firms as a package for your whole portfolio. And pretty soon they're going to roll in custody holdings, meaning that if you're going to see this come along. And now I do not suggest that you custody your Bitcoin with any company. If you're going to work with dirty fiat money, you go ETF wrapper and you take loans against that wrapper. If you wanted to, this is not financial advice. Of course, you have to evaluate the terms and conditions through your brokerage. But what you're going to see is a lot of these asset managers are packaging together the entire portfolios. Like, okay, you buy this and you can take out X amount of dollars. You take out 60% against this and then just let the market work. Now, of course, traditional markets are at all-time highs right now, and then Bitcoin's threatening to push an all-time high. You're going to see more and more of this stuff as we come into the actual tops, just so you know, so that everybody's buying and taking loans against the actual top. And then they get liquidated on the way back down when the assets fall below their loan value, and then they either have to pay that back or get liquidated, and then somebody's on the other end of that buying it. But that's more. I'll explain more of that stuff. But I do actually think over the long haul, if you hold a lot of Bitcoin in particular, you use your judgment, and if you really wanted a Lambo or a yacht, you don't sell the damn Bitcoin. You get a loan for it or against it, or a portion of it. You secure a loan, and then you go, because Bitcoin's going to go up forever. Even when it comes back down in hellacious bear markets, it's still overall, over the course of the next 10 years, you could literally, I've got projections and thoughts about where the next 10 years go for Bitcoin, but it is something that you need to keep, in my opinion. So if you want to leverage it to buy things, then sure, you can leverage it to buy things. Just be very careful. Very, very careful. Me personally, I'd rather take and trade what I have on tradable exchanges and make fiat dollars based on the price movements, utilizing the Bitcoin. So it's making me money. It's not just going up in value, but it's also making me money, which gets me more Bitcoin and gives me the ability to pull to profit for myself and my family, and then also collect more corn. Bitcoin, not the other thing that you're thinking of. I did not misspeak. No, you're hearing me live. Like the public chat is hearing me probably 30 seconds behind. So yeah. So this is going to be the low to watch right here. We do have higher volume picking up into this higher volume low wick that went down to that 58 325. So, and you can even, by the way, you can use a horizontal for something like this as well. And you could say, okay, well, this would be below the lower second. This would be expansion into this zone of high volume, and you can see kind of where the next biggest high volume candles were. But realistically, the zone below there is the consolidation around the mid 50,000, 55 to 57.7. Yeah, 57,646 here on Coinbase. But I'd take the closes, the wick low to the closes, because it could swing down there and then pop right back up. For local volume, you're looking at this high right here by the lower second at 59,500. So right there at that consolidation. So you kind of got a zone if you want to pick out that zone. And then expansion into that zone. Probably looking at, it's probably getting low on, it'll probably, if it gets into that area, it's probably going to get pretty low on momentum. So if it holds that area and starts to turn around, or you're going to see a momentum turn with it. Right now it's 60,450 or so, but yeah. Yeah, spin. One of the things that I will tell you regarding that Bitcoin, never sell it, utilize it, but never give up control of it, because everything is going to zero versus Bitcoin. So any chart you look at, including real estate, it's something, Saylor often has referenced for the past couple of years. He's and of course people tried to dunk on him when Bitcoin went to $15,500, and look who's laughing now, right? But we all, if you're a Bitcoiner, you're into the cryptocurrency sphere anyway, you understand this about Bitcoin, that it is the ultimate asset. It is the ultimate money. Because it's a transferable asset that can be used for trade. But more importantly is you can leverage the fiat dollar system to get what you want. Well, you can have your cake and eat it too if you do it right. And that is, over the long haul, the more Bitcoin you hold, the more, the more you'll be able to pull from whatever goofy system they come up with next, right? I know a lot of Bitcoiners want to see Bitcoin become the standard monetary transacting currency in the world. It is not going to be that. I hate to break it to you guys. I know I've had this argument. I was even in a Spaces last weekend where I argued with some devs about this. It's like, yeah, I get where you're coming from, but it's not going to be that. It is literally going to take over everything by infiltrating everything. It is not going to be that's just my opinion. But I made my case for why, and I have done so here before. I think it's going to be the base layer of energy output of society, which means that there's going to be a derivative on top of it that references it as its core value. So whether that's dollars or whatever fiat currency, backing it, well, it would be backing the entire system. So that fiat currency has a literal auditable, immutable ledger system underneath that allows everyone to see what's going on for real. And no matter how they try to obfuscate it, we'll be able to see that data on chain. And if that is the base of the entirety of the energy output of society, that encompasses the monetary system that they try to get us to transact in, whether it's CBDC or USD or Fed coin or whatever it might be, right? And one of the main reasons why I think that is nobody's going to want to give up a limited asset. Who the hell was going to want to transact a limited asset? And you're going to see that, like, that's the argument against using Bitcoin. I think that's the argument for it, because if it underpins everything, then you have the ability for it to be, held and distributed, because people will give it up in exchange for what? Well, you want to go buy that Lambo? You got a couple Bitcoin, even now, or not a couple. I mean, Lambos, you'd need it like 5 Bitcoin or 6 Bitcoin or something, depending on the price of a new Lambo. I don't even know. But let's say you've got 1 Bitcoin or a half a Bitcoin. 10 years from now, that could be worth massive amounts of money. And what are you going to end up with that as an asset? You're going to just liquidate your asset for whatever system we're in, whatever that currency system is that you're in? Or would you rather keep that asset and, take out a 50% LTV, which is loan to value, against it? You multi-sig, and they hold 1 sig, you hold the other, so you control it. They can't do shit without you. And as you pay back your funny money loan, Bitcoin will still be going up. You take a 10-year against it. I wouldn't take short-term loans. Because you're doing larger loans, I would do 10-year or higher against it, in whatever system it is, at reasonable interest rates. You borrow against it, and you pay it back as Bitcoin goes up. And then, that's what everybody was trying to do with BlockFi and like all the other Celsius and shit like that. But they were entrusting it to companies that were barely regulated, and were complete shitcoinery companies that you could see that they were moving the Bitcoin on chain. That there was not everybody was saying, like, the wallets. Why did you move your cold storage wallets with this shit? Like, it's because they were rehypothecating it over and over again. So one of the things about the way that I just explained to you, you do this is you hold multi-sig key, you go to the bank, the central banking system, and you say, I want some USDs, bro. And they're like, nah, man, you're in flip-flops, shorts, and you didn't shower for 5 days. And you're like, well, that's because I'm a degenerate trader of Bitcoin. And then they're like, Bitcoin? Well, yes, we can loan against assets. How much Bitcoin do you have? And you're like, I've got 0.25. And they're like, sweet. we can take a 60% LTV on that if you'd like at 4% interest. Now, of course, right now it'd be more like we can take a 50% LTV on that at 10% interest, right? But the point being is like Bitcoin's going up. At some point, it's going to be more than the loan that you took, no matter what. So it literally evaporates that loan. You go back to the bank and you say, okay, let's either redo this loan for more or let's get rid of it. Then you move something to sell it. You could move corn to do it. I still wouldn't. I'd find a way to just pay them through their own damn system and keep your Bitcoin as the price goes up forever. And then one day, one Satoshi will be $1. Who remembers that? Who's been around long enough to know what I'm referencing there? One Satoshi equals $1. Who was in that crew? Anybody? No, I've got one over here. Nobody in YouTube? That's the private chat over there, yeah. So private chat, just so you guys know, it's not anything exclusive. It's people who cannot access YouTube from work, basically. It's not anything crazy. I just set up a private stream direct through RDP stuff so that they can chat with me. They can't see your stuff, though. So Baba, hi, Baba. So let me go ahead and take a look at the chats here. We're just hanging out today. Live streams are for hanging out, right? Hi, Sam. No name. No name. Are you in both chats? Oh, you are. You're just helping me with the microphone. Thank you, buddy. I appreciate that. Yeah, because sometimes people aren't paying attention at the beginning of the stream. They're not gonna. They're doing stuff. They're waiting for the timer to count down and for me to come on the mic. So yeah, I appreciate that. Hi, Baba, Spin, Bobby, Jedi, Roka is here. So Bobby says, yes, you are. I might have been ranting about something at that point. Jedi says, those levels. I think Steve is watching you. Yeah, Steve. Well, Baba, you might remember, and whoever else, on Monday, I kind of went off on a tangent about shorting into a specific zone without first observing what's going to happen in that zone. And then also, I think I cautioned against shorting mid $50,000. Like, wait for a daily or something. Wait for a daily high at least. And then obviously the longer term timeframes I talk quite a bit about. There's no high yet. We can't project larger scale pullbacks. So we talked quite a bit about that. And you can see why. Like when I said on Monday, like, be careful. I think we were like at 54 and some of you guys were talking about the mid 50s, like look like juicy for shorts. Like, I don't know. That's you want to see structure that supports that. And at minimum for a sustainable scalp, even in mean reversion, the move was still ongoing. So you got to be very, very careful. Like this particular move, the real move for a scalp short was off the basis to where it is now. This move off the high, you're catching bullets and punches to the face because it could have kept going higher. Could you have been an opportunist and jumped on the freaking giant wick down? Yeah, but you probably would have. Which price was jumping around the order book so fast, you probably would have gotten wrecked anyway. So the real scalp short was already here at like 61.5, down to 61 and slightly under. Maybe there's more to be had on it, right? Down to the mid 50s or mid 58 to low 58 region, right? That's where you got to be careful. So one Lambo, I'll take a Ferrari, says Bobby. That's Spin said the yacht. Bitcoin is the fastest horse in the race. It is. It's the only horse. Poor Dixie. Landy called her dirty. She's been whored out by the Fed. Great speech. You're welcome. Take a loan on Liquidum against my blue chip ordinals. Oh, wait, what? Oh God, they're already running loans on freaking ordinals. I have not seen this yet. So, oh God, Landy Pump, the Landy Pump Group 69. It's where I give you guys all the elite inside deals. Go here. Go here to my Telegram. I don't have a Telegram, by the way. Please don't join anything other than YouTube or follow me on X. I don't have any other accounts. The not financial advice is some great info. Yes. None of this is financial advice. My point is like if you own a house and let's say you bought it cash, the market goes up. You could go to the bank and you could say, it doesn't matter what the interest rates is. You go to the bank and you say, I want to take a loan out on the house. They go, okay, well, we got to get an inspector out and they've got to tell us how much your house is worth. And then we'll work out the details. What loan to value are you looking for? Right? Like if you go buy a new house here in the United States, a typical down payment is 20%. Now, of course, we're not talking FHA and other rules with 0% and stuff like that. But typical down payment is an 80% loan to value. So you put down 20% and they're giving you a loan for 80% of the value, right? And then as price goes up, people refi and either pull more money out or they cash out refi or they refi to lower their rate or whatever it might be. The same thing is going to be applicable to Bitcoin. The difference is that Bitcoin is winning against houses, as versus where Bitcoin started. You needed many, many Bitcoin to buy a home. Now you don't need that many Bitcoin to buy a home. Even with elevated housing prices, houses still get cheaper versus Bitcoin. So which would you rather have, Bitcoin or a home? Well, right now the infrastructure for doing what I said, going and getting a loan against Bitcoin, is really only reserved if you have a lot, and there are specialty loans and lenders out there that will lend to you through to the traditional markets. You've got things like what Saylor did because there wasn't a big bank that he can go to at the time and say, hey, I've got all these Bitcoins. I want to take a loan for my company against it, right? And I want a 1%. No, instead, he's going to private investors through his company and offering and getting loans to buy more Bitcoin that way. So he kind of did it in tandem. He used the treasury to buy Bitcoin. And then when it performed very well, other investors want to invest with him, and then he can put out bonds and then pay fucking less than 0.5% or something on his bonds that he gets out there. So he gets new investment in to buy more Bitcoin. And it's a win-win for the people who are lending him money because they'll usually own all the stock, and the stock's going up. They're making money on the repayment of the loan plus the stock going up. So there's a million different ways that you could do things. But right now, what's going to be happening here in the United States and around the world is that you can go, even now, I got an advertisement from Fidelity not too long ago. Hey, if you custody Bitcoin with us, you can take out a loan against it. And the problem is like like if your house, this is where you have to look at terms of loans. Like if you own a home, and let's say you bought a home for $500,000, and let's say you did an FHA here in the United States, which is 0% down now, which it never used to be. It used to be 5%, but somehow they're getting them to 0 because just let's leverage the shit out of this new family that just that has $400,000 in student debt and one kid on the way and shit like that, so they can live in this house and pay us for a couple months before they foreclose on them, right? But my point being is, if the price of the house goes down, you don't get liquidated from your house at a certain level, right? It just goes down. You still owe that amount of money. You live in the house. You just have to be aware of terms like Fidelity's. If you have custody according with them, then there's a way that you can move it. You can buy Bitcoin on their platform, right? So if you have, a certain amount of Bitcoin, you can take a loan against it. But if the price goes down, you do have a liquidation level. But they have newer products that are going to be more like mortgages in the way that they operate. They're not mortgages, but in the way that they operate, where like it doesn't matter what price of Bitcoin is. It's like if Bitcoin goes to $100,000 and you have a couple Bitcoin and you want to take out $100,000 and the Bitcoin crashes to 35 and the total aggregate of Bitcoin holdings that you have is less than the loan you took, you're just stuck paying the loan and your collateral has devalued, but they're going to take that. It's like that they could lose on that just like they lose on mortgages when that happens, but it's not that big of a deal. I don't think they're going to cry if you foreclose and they have to take your Bitcoin, because 10 years from now, they'll be the ones that are up. As it stands right now, it works exactly like taking a loan against your portfolio. Which, by the way, if you're using leverage on any brokerage firm, if you're using leverage on a broker, at a broker, whether it's an online broker, whether it's a Webull, a Robinhood, I almost said Red Bull. I'm a little tired. But, or a Fidelity or a, whatever, Charles Schwab. What you're actually doing is you're taking a loan when you're using leverage. You're taking a loan, you have to pay a fee. Usually they tell you what the fee is, but they don't describe it as a loan. They call it margin, which is a loan, which is what 99% of you degens are doing when you're 100xing. You're taking a loan, which is why you get liquidated if it goes past a certain price point and you don't have a stop. Because they figure out the math for break even. They ain't going to lose. That's for sure. But those are traditional margin type loans. But traditional loans are coming and are already here. If you're a big enough player, you can go direct to some of these lenders who will give you money and you can multi-sig with them. Hopefully there will be other platforms that happen to come to market that maybe big companies that have just recently converted into Bitcoin development companies will come to market with. Hint, hint, hint. If you want to know about a guy, you know a guy who can utilize leverage in markets to enrich himself and his company to create the ultimate Bitcoin beast, don't you think he's going to come up with a product? Think about that for a moment. Why don't you ponder on that, and then you can speculate on what the whispers have been in the traditional market sphere. Roka says 1 Bitcoin will always be 1 Bitcoin. Yes, sir, and 1 sat will always be 1 sat. I mean, we could go full Venezuela here in the United States and 1 Satoshi equals 1 United States dollar. System's completely broken at that point. Maybe that's where Bitcoin becomes the standard. But I like there was what was the argument? Somebody keeps reposting this clip of this guy talking to Joe Rogan about like he's literally describing Bitcoin as the perfect asset, but like with a completely wrong take on it. And like it's like it's limited supply, so you can't, the economies need expansion. It's like, it's infinitely divisible, sir, down to the Satoshi. That's plenty expansive to support the entire world, quite honestly. And Satoshi's math was perfect, which is kind of funny because he was, according to some of these newer emails, he was kind of winging it with the math. It's like, I'm kind of taking the middle ground for population growth because you can send Satoshis and receive Satoshis. If they were denominated down to what the dollar is today, you have enough for monetary, for expansion of economies and scaling of economies. And that's not even counting the fact that what's more likely going to happen, hoarding is more likely going to happen, which is going to allow it to underpin a system. And when it's underpinning a system, well, it's being utilized in the way that it should be, which allows auditability of anyone on that system that's built on top of it. It shifts the control back to the everyday person. Saylor is going to crown himself the Bitcoin emperor of the world. So when Emperor Saylor takes over the world via the entirety of the monetary systems, and he's built Sailcoin on top of Bitcoin for that fact, because he eventually ends up holding the majority of all the Bitcoin that will ever be in circulation. Turns out Saylor's private wallet, Satoshi's. Wouldn't that be crazy? No, you never want to know who Satoshi is, by the way. So there's that. A lot of people fail. They're on this Satoshi search. You don't want to. He didn't want to be known. Don't go looking. Leave the guy alone. Who knows if he's even alive? But he did everybody a favor by restricting supply right out of the gate. But pretty soon, man, I'm Satoshi, you're Satoshi, we're all Satoshi, Bobby. Yeah. We're 6K won't break. Surprise. 60K? Or 6K? Wait, how long have you been around, Spin? Because 6K, I remember that pretty clearly as well. And 60K, I remember it was 58 and then 53,400 or something on the downside moves. You know, it might be worth investigating while I have a little bit of a moment here. There's that 4-hour doji. So take out the low, and this is going into mean reversion, probably some sideways consolidation. This was a 4-hour call all the way back in 2021. So let's go look at that from the top. So it was, what are the ranges on this? That's 60. Was it this guy here? 54. Here it is. It was the deviation. If it took out the deviation, it was going to go into distribution. That's what it was. So it was 53.8. 53.8 was the main call, but we were short at around 58 something. 50 right in and around here was the major short. And then confirmation of distribution was going to be below 53.8, 53.3 to 53.8 or something. It was a 4-hour order block candle, and I was like, that gets taken out. This is start of the bear. When we take it level by level, we look back to the accumulation lows. If that's, I was actually hoping and slightly confident that it would hold in a larger structure. But once it broke down, our condition was that we were looking much, much lower into the 20s, high 20s first, obviously, and then mid to low 20s, step by step, just like we do now. And then below 20, we were looking at 17.5 to around $15 to $16,000, and it nailed right in between that at 15.5. But yeah, and that was based on a trend fib. So if you want to take like the full trend fib for like the monthly, we've done this a few times. So you just pull from the macro low to this high, and you can take either one of these. They're so close that it doesn't really matter. And if you're looking at trend fib, this should be log as well. So let me go log scale. So yeah, this spiked into the 1272. The 1414 is at 69. It's literally the high over here, by the way, on a trend fib. So 1618 is at 80,000. 1786 is at 90. And then you're getting up into the 1888 to the 2 spot around 100 to 105. 2272, which by the way was the 1272 off of the cycle high to cycle low. 1272 to 1414 we're coming in around this 130 area. I think it was the 1414 maybe. You can match them up on your own time if you like, but the 2414 is sitting at about 142, and then the 2618's up there at 165. There's more. 3 spots. You're starting looking at 180, and then you start getting into those really crazy extensions. And the 3618 all the way up to the 4236, which is at $500,000. I am not looking anywhere close to that. We will just evaluate as things go. But 1272 to 1414 are very, very popular pit stop areas, at least in the lower term timeframes when looking at macro, at the macro. So we've hit one of those. This is where we could still see all-time high and higher, where it swings, it comes back down in the lower term timeframes, find support. And of course, we want to find support right in the zone that it's in at the moment on the monthly. Preferably on the high side of that support. You can see how the 1 spot got some accumulation from that macro fib pull. You see how the 618 was front run a little bit, directly hit, come back, retest, and on up and away, on and on and on. Very nice. But yeah, cool stuff, huh? How do you trend fib? Well, I mean, it's exactly what I just did. You pull the trend fib tool. In this case, because we went to the macro time frame, like the monthly. In this case, the first impulse up to the highs here at around that $31.8 to $32,000 to the higher low on the monthly. So that's your trend. So you're following the trend. The first wave is the measurement for the 100%. So you can go here or here. It doesn't really matter. Wherever the low of this consolidation was, you can take the higher low on a close and take the wick low there is fine, because that is part of the actual swing trend. So swing low, swing high, swing higher low, and then you get your trend fib. You see the 1414 lining up with the all-time high perfectly. So, we're kind of in that zone of resistance around the wick high zone. So we're following the, just so you know, if you are new to doing this, you're just following the swing low to swing high, swing higher low. That's your trend. That's your uptrend. Then you can measure it. Typically, after breaking out above the 1 spot, you're looking at 1272, 1414. Once you get past there, you kind of got a zone. And credit Torque for this, because Torque is here with us, and he backtested the shit out of the 888, and even on extensions, it works very well as well. So that's up there just below $100,000. But the 1618 to 1786 is a generalized zone of interest. So between $80,000 and $90,000 is going to be a big one. I do think that Bitcoin is destined to go much further. into the mid to low $100,000 region at minimum. I do expect significant resistance overhead by the wicks because that's just standard in everything. We looked at this during traditional markets run up to the all-time high, right? It found significant, it got front run around there, and then it kind of swung it and then came back down below it and then just rocketed right through it, right? So when we were looking at traditional markets all-time highs, if you've been watching our streams for a while or my stream, it is ours. You guys are part of this, so it is not just me. Although I probably would just stream to no one and just to get my thoughts out. But I appreciate that you're here to listen and participate. Either way, you're likely to see resistance around the all-time high. We're hitting that first part of resistance right now, right? So we're already in this zone, in the monthly zone, 58.8 to 61.350. Next zone likely to act as resistance, but these are the last two. This is it. This is it, and then bears are done. Bears are already plotting to flip to bull as they push price down. They're just going, freaking hell, man, I missed it. I said 50K was the distribution pattern, and now I'm wrecked. Well, mid to low 70s is probably the next area after the all-time high. It's probably safe to look at like $5,000 candles. We might get $10,000 candles. I don't know if it'll be $10,000 wick to wick or wick to wick or close to close. We're probably going to see a couple of those. But like good $5,000 candles up are what we're seeing right now. I mean, we're seeing big boy candles. And this will be the first, depending on how today closes, this will be the first like $5,000 wick, $10,000 candle kind of thing. Because this was open at 57.7. It's like an $8,000 candle. But like we're looking at a possible $5,000 wick, right? So like looking at like $7,000 in one candle. I would expect above the highs, 69 is basically 70. Originally from original projections, I had the all-time high originally coming in prior cycle coming in around 70 to 72. It got front ran by $1,000. That was prior. That was structure prior to the $65,000 high. We talked about and nailed that Wyckoff reaccumulation. Like we nailed that to a T. For those of you that remember that was cool. And then we got very, very close to seeing that upside target at 72. But I give it a range. 70 to 72. It came in at 69. You consider it hit as soon as it started selling off. And then the breakdown below, it was 55 something for the local range, and then of course the 53.8 was the major breakdown. But as it stands right now, you can see that area swing, somewhere around 70 to 75. I'd tend to look probably 72 to 75 as it kind of populated on some of our fibs. So that would be kind of the main area to look above the all-time high. And if it starts passing it, then we're probably looking at mid 70s, but anything can happen. Things get exciting. Probably see very, very volatile price action around that, just like we're seeing right now. This is volatile. I mean, the structure might look like, oh yeah, it's your uptrend, and we're gonna get bullish divergence off of these lows, and maybe it's gonna hold. But and then you realize when you measure this, like, oh shit, this was a $7,000 move, right? Like, that's crazy from that prior consolidation. So this big old uptrend before trend reversal was a $7,000 move. So, trend reversal wick to the wick here, that's a 9%, $5,800 freaking range there. That's massive, especially when Bitcoin was trading at like, today it's at 50,800. Oh, now it's at 51.2. Oh man, now it's down below. It's 50,500. Ah, now it's 51.3. Like, just these little $400 and $500 swings. Or at one point, you guys remember consolidating around the $30,000 region, freaking just consolidating sideways in like $100 ranges where candles are just marching sideways. Essentially, you go down low enough time frame and you can scalp it, but scalping a couple $100 range is nothing when you can now get a nice defined range here on this of like essentially wick to wick on the move down, 6,800 or $5,800, and total move up, you're looking at a range of about 7,000. That's amazing. Of course, you don't want to see it drop it. That's pretty bearish and probably looking lower for liquidity, which in the context of the higher time frames is bullish AF. Spin says I've been around since 2017, 2018. Didn't buy because your friend was using it for stuff. Oh, because you thought it was for the bad guys. The bad guys use this money. It's going to get me in trouble, and I've already got a case, bro. I can't be having this dirty shit, man. I got a case. I'm just kidding. I don't know if you got a case. I'm just funning around. And if you did, that'd be funny. I can't have parole looking into me, man. Using this funny money currency. Me and my bro, we had this cryptocurrency thing going. Well, he did, but I didn't want to get involved. Trying to stay out of lockup. I ain't going back. Just kidding. Let's go ahead. Yeah, no, I can riff for a while. Yes. Also said I'd buy after 3K after it dropped to 6K. Didn't quite hit 3K. No, it came close. Oh, yeah. So when I was talking about buy and sell because you have this nebulous number in your head, yeah. Sam says spend you bought it 350. 350. Okay, no, he explained what he was talking about. He's been basically involved or watching the market since about 350. Yeah, man, that's a long time. You're pretty much a veteran. I got a couple more years on you, but in terms of cycles, this is only the third major cycle, so, and it's a lengthening cycle, so. But yeah, cool beans. I think that's going to do it for me today. We'll just quickly, at least for Bitcoin, and chatting about my thoughts on these various topics. But let's go ahead and just check in on traditional markets. I suspect they're doing quite well. At least in some select markets. Oh, no, they're all red. I lied. They're doing fine. They're doing fine for right now, especially when you look at the monthly pushing the upper second standard deviation. It's almost like Bitcoin. It's an expansion here on SPY. No, the daily looks fine. Back to the upper first. 510, 511 is the next upside target on the daily. From there, 515 would be the next target. If it does drop 505, we're looking 500 at the basis. Below there, we're looking around this wick low area at around 490 to 495. Yeah, basis is probably in play for NASDAQ right now. It's tough to say. You had a lot of the major car companies, which are in Dow. And then you've got Tesla, which is actually Tesla might be turning around on the weekly and setting up for a big run. But basis here at 17.7 20 or so. If it does drop it, lower first is sitting at 17.5. Below there, need to see bulls hold the 17,300 region around the lower second. If it does regain the upper first at 17,940, 950, I would say even 18. Then we could start looking back up to like 18.1 to 2. Beyond there, looking 18.2 to 4, maybe 2 to 5 if it gets aggressive. Dow with a beautiful wick and then a close coming back in above the upper first. That's actually really pretty. If it does come back down, though, and drop the wick low, be aware of where the basis band is. It's likely going to update on open tomorrow to around 38,750. So if it does drop that area, be aware of it, of the basis at around the 38,700 zone. If that's dropped, then we're looking lower first at 38.4 to 38.5. Below there, lower second is just fine, but you do want to see it bouncing from there aggressively. Or a reaccumulation that starts to break out back to the upside, and that's coming in at like 38 to 38.2. If it drops the lows there, then it's going to be a fun drawdown for the bulls there. If it can, stay above the upper first and at around 38.950 or so, I'd be generally targeting, if it can maintain that. I'd be generally targeting the highs again, somewhere around 39.2 to 5. It did hit 39.3, but 39.2 to 5 is kind of a good range. This upper third is going to update to around 39.5 when this opens tomorrow. There's TradFi. So currencies and bonds real quick. Nice rejection there, although this could still be forming as I stutter. Dixie could be forming a low here, so I would watch it. If it starts closing back above this open from Monday, 103.96, so basically 104, and it recaptures the basis, then we're looking for a markup to this wick high again around 104.25 or so. Above there, we start looking at that upper first to this resistance up here at around 104.40, 104.60, so kind of a zone up there. Above there, we're looking to around 104.80, 105, and then above 105, we're looking to that 105.40 to 105.60. If it does drop the lower first, we're looking for the lows coming in by the lower second around 103.5 to 103.40 at this current moment. Below there, then we're looking 103 to 102.50. Gold is probably hurting right now, if I had to guess. No, it's holding. It's holding. Look at you, gold. You're finding resistance, though, and this is still a downtrending structure. If it does put in a high here, I'd expect it to be somewhere. I'd expect to find it somewhere around the lower first. It's going to put in a high on any closes below 2024 to 25 bucks. If it drops this low from this doji that's kind of defining this closing range, which was Friday, last Friday's candle. This is lows at 2016, so that's a weekly level as well. I'd be looking for a mark down to 2010 and possibly back to the lows by the lower second at around 1994, and maybe even go for the full Monty there at 1985 or 1980 by the lower third to this 1998 or 1988 SR level. Below there, we're looking 1960 to 1930 as a larger zone. We can refine if it starts to drop around the mid-19s. If it can regain the upper first, though, at 2,040 bucks, then we're looking right back to 2,055 to 2,065 above there. Probably somewhere around 2,080 to 2,100, and above, we're looking at 2,150 to 2,120 by the wicks. Gold probably still has some momentum left to the upside. It does. So it's just kind of taking a pause. But if it does put in a high, it's going to turn this down 2015, and that's exactly where it would put in a high. So as long as it's above 2015 for at least the next day or two, it's looking like it could, tap on those upper zones, maybe start getting a little bit of a rally. So that's going to be it for the analysis. I eventually got around to doing the rest of the analysis. Most of you probably aren't here for that, but there are a select few who are. So I did want to make sure I got that in for you. Can I look at altcoins real quick? Sure, I can just quickly, yeah. Ethereum doing good. Did it hit 3,500? Is this Coinbase? It hit just below 34.92. I was looking for right around that area, right around 3,500. So looks good. Volatility is lining up for it to continue getting expansion and testing around that area. That might define a top. But above there, I'm looking for like 3,600 to 3,700, 3,750 or so. There's support and resistance up there. I'm not going to map it out right now, but I can always take a look at it if there is enough interest. As long as it's above 3,000, it's doing fine. In terms of momentum, or not momentum, but structure. But if it does drop the 3,100 area, that's where you got to pay attention to 3,000, and especially 2,900. Basis is going to be around there. If it drops that, you're looking somewhere around 2,700, 2,750. Do I think 4K is in the cards soon? Yeah, probably. I mean, it's looking good. Nice expansion on the weekly. It's just kind of getting rolling. It held our zone that we picked out from quite a while ago, back in fall, coming into winter. Looks good. Yeah, it looks strong. Nice weekly expansion. 29.80 basically for the weekly. Looks great. Yeah, up and away. Lower term time frame volatility, be damned. Who cares? It's lining back up anyway. 2-day looks fine. Yeah, it's getting hot, but the biggest moves, like I told you, for Stoke, biggest moves are always going to come when they're in the overbought and oversold, or at least typically, not always, but typically. And 3-day expansion is beautiful, nice compression, just like Bitcoin. You know, we're looking at basically the same thing across the board for most cryptos. You know, our alt's gonna rally as hard as Bitcoin and ETH in scenarios like this? Probably not. You know, you got some losses on the board here today. And that's to be expected. Big boys move first, and then, profits will roll down. I know lots of guys are excited about the ordinals market. And, that's probably going to eat up a lot of liquidity as well. But it's more Bitcoiners now. Some of the Ethereum guys are coming around to it. Of course, Bitcoiners a little irritated because it's a lot of spam on the network, but still it's monetary transactions on Bitcoin. I'd rather have it than not. But they're scammers. Yeah, well, scammers are everywhere all the time. Who cares? If you can make money by monetary exchange, you have to be the judge of that. So you're the one that's going to buy that thing because you think it has value or future value. And it's the last guy out the door is going to be left holding the bags. So it's one of the reasons why I said, pay yourself. But it could go up even more. Don't care. Pay yourself. In aggregate, as long as you're paying yourself along the way, you will have made much more money than if you wait to try to pick a top. Everybody clear on that? Because that's what I'm going to leave you on. You guys have a wonderful morning, afternoon, and evening, no matter where you are in the world. Please trade safe. And, of course, as always, stay safe. We're going to throw the Stranger Things tune on here and pump that up on the way out for those of you that like to listen to the tunes after the stream has ended. And it's not actually Stranger Things. It's not the licensed song. This is an homage to it, I guess, in synthwave. Yes, synthwave. It is a synthwave playlist. Yes, and don't forget to like and subscribe on the YouTubes. If you're watching me on another platform, go ahead and click follow. I do suggest that you come over and follow me on YouTube. If you are watching this on X, you can just click the follow there. YouTube is in the main profile link as well. So, and yeah, that's going to be it for today. You all have a wonderful one. I will I'll be back tomorrow with a recorded video. I'll try to keep it short, no guarantees. But I will be reviewing the monthly close. So that is going to do it for me today, guys. Thank you for hanging out. Take care. Landy out.